Hey, good morning, guys. Good morning, Cab. Good morning, Joel, Luciano. You guys will be glad to know that I actually hit start on YouTube this morning. So do me a favor, throw some great questions at me today. Let's make a great video for all those new people. How's everybody doing today? Good to see you. Joel, nice to see you back in the room. Good that you take a day off. It's good to do that every now and then. Miss Safia in the room. Yeah, Luciano, that was my fault. I forgot to hit go live. So we use the studio and it records everything. And if I don't go live, it never actually broadcasts to the recording. Totally my bad there. Um, Thank you for that. Thank you for that. Good morning, Lyle. Good to see you back. Guys, weird thing. We're going to do everything that we did yesterday. And we're just going to do it again. Maybe we'll do it a little better. I don't know. We'll see. Um, I wanted to show you guys this though. When I took this picture this morning, all I did was think about this classroom. All I did was think about, man, these are all the people that are just looking for that one thing, right? Looking for that best of the best, looking for that highest probability scenario. And guys, this is it. So if you're wondering about terminations that create reversals, man, that's it. That's textbook. No triggers through. Everything rolls. If you're wondering about the most advantageous momentum, that's it. That's as good as it gets. And the clear path is the same thing, guys. And I want you to see how I was able to, ahead of time, put an order right there, right where the market was most likely to continue. And guys, this is such a powerful picture for me. This is such an important picture that I'm going to go to my favorite looks section because I'm not going to lie. This is the look that I never want to miss. This is the look that for me is the absolute best of the best. And I'm going to call it a high probability trend trade short. And I'm going to put it into my spreadsheet here. And I'm going to make sure that I never miss this trade because this is everything that I look for, 100%, everything that I look for. And then you know what the cool part is that I would take this trade 1,000 out of 1,000 times. I would never hesitate. Oh, good morning, John Novak. Thank you for that. And guys, when this trade came to fruition, I'll show you what it looks like. That was my entry right there. And on this entry, I got a reversal bar. Guys, I had 3 ticks of risk, and I actually took a 3-tick loser here. And that's okay. It's all right to do that because everything that I'm concerned about is my execution. I'm more concerned about doing the exact same thing every time because of the advantages rather than worrying so much about whether or not it was a winner or a loser. And I know that that seems weird and a little counterproductive, but we do that because the patterns being taught are patterns that are repeatable. They're patterns that happen every day in every market. They're patterns that create a statistical advantage, and they're patterns that typically win more than they lose. So it makes sense to commit to the process, and then from the process, results are yielding. All right, so there's my little soapbox. Let's get into doing what we do, guys. Every day starts with news. Every day starts with a news check, making sure that we're not trading into something that might create an emotional response. Today is, what is today? Today's Wednesday, December 20th. At 8:30 a.m., there was current account. It was low impact. It was a yellow box. Doesn't really faze me. Not worried about it, but I like to be mindful. But at 10 a.m., we have CB consumer confidence. If you're a truck driver, it's imperative that you're confident when you buy a CD, right? You want to know that it's going to work. So there's a news release that revolves around that. Not really. CB consumer confidence. I don't know what it means. It's the level of a composite index based on surveyed households. Whatever. That means absolutely nothing to me. But what does mean something to me is that red box, the cheeseburger index. That red box lets me know that there may be people waiting in the wings to react to whatever that news is. There's people that might go long, might go short, might jump into positions, might jump out of positions. The reality is, and kind of the point that I was making, guys, is that it doesn't matter to me what this says. I couldn't care less. I don't trade the news. But when I see high impact, when I see medium impact, and obviously existing home sales is pretty clear, but it doesn't matter. somebody may be reacting. I want to sidestep the market at that moment. I don't want to be in front of what could be an emotional freight train. Um, and knowing when the news is released gives me an advantage because it keeps me from placing myself in harm's way. And that's really one of the best things about what we're capable of doing is it's pretty easy to stay out of harm's way. So news every day, checking it out, making sure all good. 10:30 a.m. My crude oil traders. At 10:30 a.m. we've got. Here's the link for it. I'm sorry, I didn't drop it in there, did I, Lyle? It's just forexfactory.com/calendar. I've been looking at this one for years, and I'm not endorsing it. It's easy. It's easy to come through and look at it. If you're a crude oil trader, guys, at 10:30 a.m., they're going to do crude oil inventories, which means they're going to make an announcement about what's in reserves, which means that my crude oil speculators have the potential to make things change direction rapidly or make that market spike or bump. And even though it is low impact, for a crude oil trader, this is very much high impact. And then, Lyle, when you go to the site, there's a filter right here in the upper right-hand corner. I want to show you guys this for those of you that have never seen it. In this filter, you can get that high impact, that medium impact. If you're not even concerned about low impact, take it off of there. That's totally up to you. I do everything that they offer, but I only do it in America because look at what it looks like if you try to chase news from around the world, right? That's all the news. You would never be able to trade, ever. It's too much. So for me, I'm making sure that all I'm doing is the U.S. markets because I'm only trading U.S. markets. And if you're trading something that's a different market, absolutely put that filter in. But this is where I go every morning. This is my first stop, making sure. And then I come over to the tutorial section, guys. This is where everything that I talk about is. Click right on that button to get me to the tutorial section and the education page. And then scroll down. The picture that I showed you guys this morning, the trade I took, was a high probability trend trade. It was a trade where every indicator on every chart agreed for the trade. It was when my triggers were its absolute strongest, when there was nothing between me and my target. No termination conditions existed. Guys, this is the best chance of success as a brand new user. This is the highest probability trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules, which means that this is a trade, you could say it the other way if you wanted to, glass half empty. This is a trade that 20 to 30% of the time the market's going to be wrong. They're going to do the wrong thing and they're going to stop you out. That's okay. That's a part of trading. But when you learn this high probability trend trade, guys, and this is what we focus on for the first hour, it gives you this magical gift of becoming a chart reader. And new users are like, oh, I don't want to be a chart reader. I want to be a day trader. But you want to be a chart reader because when you're a chart reader, you're going to understand where the market is likely to continue and you're going to be able to embrace that spot as entry spot. You're going to understand where the market is likely to go. And this is going to help you capture profits at appropriate areas, riding momentum all the way to that line off in the distance. And then you're also going to understand where the market is likely to stop. And these likely to stop areas do two things for the Nexgen trader. The first thing they do is they wave this giant red flag that says, hey, the market may not go any further. Why don't you sit on your hands and do nothing rather than hope, rather than wish, rather than want? And the second thing that these likely to stop areas do is they behave as an anchor. They create this anchor for the absolute highest probability trend trade that you can take. So in one of these termination conditions, one of these likely to stop areas, here we see Fibonacci resistance that reversed the market. And that's what sets you up for the highest probability trade. You can also see it in crude oil. Look how price reached these blue lines. And that's what started the push up. You're going to be able to identify these areas. If you're in a short position, it becomes an outstanding spot to take profits. Or if you're waiting to get into a position when it reverses the market, it gets you looking for that best of the best. And these likely to stop areas are going to play a huge role in what you do because the high probability trend trade that comes after one of these termination conditions, that is the highest win percentage that we teach. And when you become a chart reader, you realize that 90% of your day is doing nothing. 90% of your day is sitting on your hands, and you're really just kind of very relaxed and very calm in this zen-like state. Waiting, just waiting for your advantages to be present so that you can enter the market, so that you can take this trade where the market is most likely to continue. And it's your ability to read your charts. It's going to take you next level. So we're going to focus on a high probability trend trade this morning. We're going to take this trade that only has 3 rules. Simplicity should be such a big part of what you do. There's no reason to complicate with all sorts of rules and a multitude of indicators. Let's keep it simple. You're going to have 3 rules, and these 3 rules are going to provide 3 advantages. The advantages are laid out in yellow here, and it's the recipe for a trade. 3 advantages equals a trade. It equals a high probability trend trade. And when your rules are met, you'll have the advantage of momentum. You'll be trading with a market that's likely to push in the direction of the trend. You'll have a clear path, which means that none of those key areas, those likely to stop areas, are in front of you. And then you'll have an entry area. You'll use a smaller chart to refine the large chart to get you into the market where the market is most likely to continue. And these 3 rules, I just kind of gave it away a little bit, happen on only 2 charts. That's it. 2 charts, 1 large, 1 small. Large chart's a broad stroke of a brush. Large chart is a slow-moving chart. It gives you the general consensus of what the people in charge want to have happen. Large chart's going to define direction. Is the market going up or down? Large chart is going to define momentum. Does it have enough momentum behind it? Are the people in charge pushing it hard enough to keep it moving in that direction? And then finally, the large chart's going to define areas. We go right back to those likely to stop areas, making sure that we don't trade into them. Your large chart uses 1 bar. Sorry, I'm sucking wind a little bit. Allergies got me today. Your large chart uses the most current bar to give you all this information. 3 very key concepts and only 1 bar. Your first 2 rules can be met or not met on that most current bar. And when they are met, rule number 1 provides you the advantage of momentum, meaning that market is likely to push in the direction of the trend. Rule number 2 says that you have a clear path, that there's nothing between you and your target. And guys, these 2 advantages must be met before you ever turn your attention to a smaller, faster chart. Because on that smaller, faster chart, you're going to take that 1 bar, and it's going to break it down to about 20 or 30 bars on that smaller, faster, that refinement chart. And then what that's going to do for you is it's going to let you pinpoint exactly where the market is most likely to continue. And by doing so, it's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. But it's imperative that the large chart leads the way. The small chart can be a little bit deceptive. If the small chart says it's the perfect entry, but the large chart doesn't support it, the likelihood of success goes down. And let me show you kind of a cool visual of the large chart, small chart. Large charts what the large crowd wants, what the people in control want, the people that have the money that push the market. This is what they want to have happen. It's going to define the direction. Is it going to go up or down? Well, it's going to go where the money wants it to go. That's the easiest way to think about it. And the more money you dump into it, the more momentum it creates. And then the large crowd's going to react to those areas. That's where decisions are made. Those likely to stop areas. That's where buyers buy and sellers sell and profits are taken and positions are exited. And all this happens on the large chart. And then you guys are going to use a small chart, which is what those couple yahoos willing to fight everything want to do. Everything says up, and there's always some jerk that's like, yeah, you know what? I got a couple $100 million. Let's push it down a little. And he's the small crowd, and he's fighting, and he's creating these little pushbacks. But these pushbacks tend to go right to the point where the market is most likely to continue. And this is a pattern that repeats itself every day. Our job is to stay in touch, in tune with the large chart, to never fight it, to always go with it. It's like a lazy river at MGM, right? You're just relaxing, soaking up sun, enjoying the flow. The large chart, I like to compare it to a shark swimming through the ocean. It's this big man-eater, right? It's scary. There's a dude with a cello floating behind it, making that ominous noise. This is the guy that creates momentum, that reacts to areas, that establishes trends, guys. Think of yourself as a remora. You don't have to be the first one in the fight. You don't even have to be the last one in the fight. You just need this guy to set you up for success. and you can cruise along and just wait for your share of the market. Let the market give you what it wants to give you. Don't try to take what isn't yours. And you don't have to be first, guys. That little fish swimming in the mouth, he's a guy that tried to be first. It rarely works out. So 3 rules, 2 charts. Let's keep it simple. Let's keep it focused. Let's identify the highest probability trend trade that we can take. And guys, excuse me just 1 second. Sorry, I got a client over here on the slide that had a question, and I'm trying to answer it, but it's hard for me to answer. I hate to divide my attention between you guys. So 3 rules, guys. First rule, large chart must have strong triggers. Strong triggers provide the advantage of momentum, and I'm going to show you how easy it can be. In order to have strong triggers, you got to be going with the direction of the market. If the background on your large chart is green, the market's going up. It doesn't mean that there's a trade, but it means that you're only focused on having your rules met for high probability trend trades long, for buying the market. If the background is red, it's going down. And you only have to be looking for rules to be met for high probability trend trade short. And just never fighting the trend, guys. Never fighting the direction creates a huge advantage. And the other part of that is, in order to have odds favorable momentum, your trigger lines have to match. They have to match what you see the background telling you. So when the background is green, strong trigger lines mean that your small triggers, those solid lines, have broken above the large triggers, those dashed lines. It's like scissors that are prepared to open, or that have opened. And that separation between the small and the large is what we call strong triggers. That separation lets you know that the odds are favorable for the market to continue in the direction of the trend. And you're going to hear in this classroom all day long, odds favorable momentum. Did you have odds favorable momentum? If you do, and you're going to see it annotated OFM, when you have that odds favorable momentum, it fixes mistakes sometimes. Odds favorable momentum breaks areas that may have otherwise held. Odds favorable momentum pushes the market in the direction of the trend. And the cool thing is that when you have that odds favorable momentum, that is the most favorable look for buying Fibonacci support in an uptrend, for selling Fibonacci resistance on a downtrend. And what you'll see on that large chart are these tails, or these wicks down here by my cursor. On a large chart, you don't see it happening. But that's why we use the small chart. We use that small chart to refine. Each of those wicks are actually a pullback on a smaller, faster chart. You're going to be able to pinpoint in an uptrend exactly where the bottom of that tail is most likely to form. In a downtrend, you'll be able to pinpoint exactly where the top of that tail is most likely to form. That's your most likely to continue area. That's what rule number 3 is going to do for you. But you can use these tails historically to go study, to look for rules being met, to see if the large chart was setting up opportunities. And then the opposite of strong has to be weak, right? So if you've got strong trigger lines, eventually that momentum has to go away. When the small triggers work their way back inside of the large triggers, those scissors close, well, now I have weakened triggers. Weakened triggers let me know that anything can happen up or down, and it takes away my advantage of momentum. Weak triggers precede reversals very often. You'll see weak triggers heading into those key Fibonacci areas before a reversal in the market. And I'm going to show you just how easy it can be. Using the most current bar, my background is red. I'm only looking for rules to be met for high probability trend trade short on crude oil. That's it. That's my only option right now when the direction is down. But what you'll notice is that my large triggers are green and my small triggers are red, which means that I don't have the advantage of momentum, which means I'm in a holding pattern. I'm not looking for a long or a short. I'm waiting for the momentum to create an advantage. In the NASDAQ, my background is green. I'm only looking for high probability trend trades long. My small triggers are above And away from my large triggers, I have momentum to the upside. That's the first rule being met, guys, and I can see it on my most current bar. Smalls above the large. This is rule number one being met. This is rule number two not being met, but we're going to talk about that in just a second. And then on the S&P, once again, I've got smalls below the large are wide, they're angled in the direction of the trend. There's one of those tails, there's one of those tails. And guys, you're going to see this all day long. Huge momentum pushes the market down, momentum pushes the market up, momentum pushes the market up, and you see these tails kind of littering the chart. You can go back and study and see if there were opportunities for you. And then it went right to that blue line with all that momentum. Kind of cool. You knew exactly where the market was likely to go. So odds favorable momentum, guys, that sets the tone. Is everybody okay with the idea? This is usually the one that's the easiest to learn for people. Green means you're looking for longs, looking to go up. Separation between the small and large says that the odds are favorable for it to continue. And then 90% of your day is spent reading and waiting, right? Odds favorable momentum pushes the market down. Anything can happen triggers, those weakened triggers. There's your reversal. Probably key Fibonacci area there. Gives you odds favorable. There's your tail. There's your potential entry. And it goes all the way up to weakness, where it reverses, creates odds favorable, and there's a tail. And then you get into consolidation. This is where you're typically caught in between a couple fibs. Smalls and large don't agree. You may have the large up, the small down, vice versa. Large and small don't agree with the background. They may be red and the background is green. It's impossible to have the advantage of momentum if triggers and background don't match. So this is a transition phase. This is where people tend to predict. They try to guess. They hope a little bit. I think because the background is green, the market's going to go up. And sure enough, it goes down. They're like, well, I guess I was wrong. It's probably going down even though the background is green. And they get into a short position and then suddenly they're stopped out again. Guys, this is the point where people lose an awful lot of money in those maybe areas, in those I have to predict rather than see what my indicators are telling me areas. And if you start now, day one, sit on your hands and wait. When you don't have that momentum, just wait. Eventually, it's going to happen. Somebody's going to win that fight between buyers and sellers. And guys, that's rule number one. That's strong triggers. That is very much setting the tone for everything you do. Rule number two says don't trade into termination conditions. Don't trade into those areas that may stop the market. The areas that may stop the market happen on a large chart. Once again, the large crowd is reacting to these areas. Buyers are buying and sellers are selling. Profits are being taken. And these are like lines in the sand, guys. We're going to use divergence highs, divergence lows. On a large chart, on a small chart, divergence is nothing more than a loss of momentum. That's it. If the market goes up and then comes back down, right around the third bar, the calculations are done. And you'll see a magenta line print from the top of the pivot if there was a loss of momentum, if momentum didn't follow price. It uses MACD BBs in the background for you guys that understand those indicators. Price pushes down, pushes back up. Right about the third bar, this cyan line will print if there was a loss of momentum. And it's important that you understand that the line doesn't print until the third bar because price is not reaching this area. This line wasn't there. Your price is actually creating this magenta high, this cyan low. We're also going to look for red Fibonacci resistance, those red fibs that are off in the distance. You're going to see blue Fibonacci support. You're also going to see these yellow 1-to-1s. These are the areas that may stop the market, guys. These are the areas where decisions are made. And I like to think of them, there's three potential things that could happen. The first is it may just stop the market cold, right? Boom, bounce down. The other is that these are where decisions are made. And when you've got a couple different right next to each other, look at the tails. And what happens is you get this little moment of indecision when the market, when the buyers, when the sellers are trying to decide who's going to win. And you'll see on a smaller, faster chart, a lot, it looks like a seismograph. There's no reason to get caught up in that decision-making process. And then sometimes these areas, typically with that odds favorable momentum, they'll just break. The buyers are pushing, the momentum is insane, and the sellers go, yeah, we're not going to fight that. Let's let them break this area. Maybe they'll get to the next one. So when we talk about these termination conditions, we're going to look for them on the large chart because the large chart leads the way. The large chart defines the areas that we're going to respect. And the recipe is pretty simple. And I want you to see it. Wow, S&P is putting on a clinic today. If price reaches an area, in this case Fibonacci support, if none of your trigger lines, none of those those momentum indicating trigger lines break through, this is an area that may stop the market. It may reverse the market. It may create an untradeable bounce. And you can see through the tail the bounce that happened. Let me pull this one out. We don't need a market flow chart. We're doing that for a lesson yesterday. You can see on the smaller, faster chart the bounce that happened, the bounce that came right off of that key Fibonacci area. None of the triggers broke, and it shot the market right back up. Here, it reached a fib. None of the triggers broke. That's what started the reversal, even with odds favorable momentum. And you can see that the market came from Fibonacci support, and that's what carried you all the way up to Fibonacci resistance, not one trigger line through. So the recipe is pretty consistent. The recipe is pretty easy to follow. Let me pull up the user guide, and we'll go to tops and bottoms. This is the section that talks about termination conditions, and it shows you that recipe. Price reaches an area, in this case Fibonacci support. Absolutely none of your trigger lines break through the area. Therefore, no more short trades, guys. This is identifying when the path isn't clear, when it's time to sit on your hands and do nothing. Again, price creates this divergence low, letting you know that there was a loss of momentum. The recipe is price must come back and reach the divergence low. When it does, all you have to do is ask yourself, where are my trigger lines? If they remain above the divergence low, no more short trades, guys. This is what we call a pivot stop out of a prior divergence. You're going to see these on large charts, and they're very powerful. They may reverse the market. They may create a huge untradeable bounce. They become more powerful still if they coincide with Fibonacci resistance. And this is kind of the small version of why 90% of your day is just reading indicators. 90% of your day is waiting for advantages. Because if you're in a long position or you're looking for a long position because everything says up and price reaches Fibonacci resistance, the only thing that you have to do is ask yourself, where are my trigger lines? And if they're all south of resistance, guys, just don't do anything. Say to yourself, make it out loud. This area may create a bounce. This area may reverse the market. This area may create a fight. I am not in control of the market. I don't know what it's going to do. Therefore, I'll do nothing. And from resistance, everybody that didn't go long kept the powder dry because it pushed all the way back to support. And when it did, not one trigger even came close to breaking through that area. Once again, I can't go long. I can't go short. I'm sitting on my hands. Maybe I'm getting a little frustrated. Maybe I'm getting a little bored. And the buyers push off a support all the way up to resistance. And when they do, price reaches this level of resistance. All my triggers were below. No long trades. It reached the divergence high line. All the triggers were below. No long trades. It reached the second level of resistance. All my triggers are below. No long trades. 3 termination conditions in the same spot. My triggers are green, but I can't go long. My background is red. Rule number 1 keeps me out. Rule number 2 confirms, hey, Mark, stop looking. Well, ultimately, this pivot stop out, these 2 areas of resistance, they reverse the market. The large triggers pinch and roll. They go from green to red. My small triggers get below the large. I have separation between the 2. That's odds favorable momentum. And I haven't reached that key Fibonacci support, the same one that held back here. Therefore, I have a termination that created a full reversal that gave me odds favorable momentum, rule number 1. It provided me a clear path, rule number 2. And it gave me one of those tails. And that's going to be rule number 3. That's going to be you guys pinpointing where that market is most likely to continue. And that termination condition that creates a full reversal, Guys, that's a strong top, and that's the precursor for the highest probability trend trade that you can take. So when you reach an area and absolutely no trigger lines break through, sit on your hands and do nothing, guys. Just give it a second. It's either going to break, it's either going to bounce, or it's just going to rattle there for a little bit. It's okay to not know. It's okay to not know what the imminent future is. Wait for your indicators to tell you. And I'm going to share these pictures. These are for you newer guys. Here's termination conditions at a high when the market is going up. The recipe is exactly the same. Price reaches, no triggers, no trade. It's really that simple. And here's that divergence high, just a pivot. But when price reaches it and the triggers remain below, now it's a turn. And then the same is true for termination conditions at a low. The recipe never changes, guys. If price reaches the area, the triggers can't break, sit on your hands and do nothing. Is everybody cool with this? Lyle, does that make sense? Tony, you okay? As we move into this, who else was in here brand new? I know I had a couple people. Guys, rule number 2 is going to keep you out of a lot of bad situations. Rule number 2 is going to test your patience bone a little bit. And the reality is rule number 2 is the most broken rule out there, guys. But the cool thing is that areas break, right? Sometimes we get there and we have to sit still. An area is considered broken when both the small and the large triggers get to the other side. This is your high probability scenario, guys. It either is broken, the path is clear, or it's not. You can see that price reaches, no triggers, sit on your hands. Small and large break through the area, resistance behaves as support. There's one of your tails with odds favorable momentum. This is the black and white version for the brand new user. It's either clear or it's not. But the reality is areas break all the time. Otherwise, it would be like this horrible game of Pong. So there's a third option, guys. And this third option is going to be your introduction to a medium probability trade, to a trade where all the indicators don't agree. A small issue exists. Your ability to read your charts that you're developing through the high probability trend trade is going to have you identifying this look. And this happens when the small triggers smash. And I use that word because I think it's so important to keep that in mind. They smash through the area in question. Because remember, this is where decisions are made, right? And the closer you are to decision-making points, the more wonky the market can get. So when the small triggers smash through the area, but the large triggers lag behind, what we're looking at is 50% of my indicators have made it through, or my triggers have made it through, 50% have not. This is a 50-50 trade. A 50-50 trade with odds favorable momentum, and this is such a key part of it, guys. Strong triggers break things. Weak triggers, not so much. With odds favorable momentum, this area has the potential to break. But because it's not broken, it's not a clear path. And if it's not a clear path, it's impossible for your trade to be a high probability trend trade. It works its way into what we call a medium probability trend trade. And a medium probability trend trade means that most of your indicators line up. However, a small issue exists. That area not broken is your small issue. And if that's your small issue, it's imperative that you don't sacrifice momentum, that you have the best chance of success with momentum, and that you don't skimp on your entry area, that you make sure that you have the least amount of risk and the highest probability as you look to take a trade. Because what happens is strong triggers love to break areas. And it happens a lot. But the same is true the other direction. Even with strong triggers, these areas don't always break, guys. And I'm going to give you a plan for recognition on that 50-50 trade so that you can understand when an area is more likely to break or more likely to hold. But it starts with, and this is my favorite picture, I say that every day, and it really is. It starts with keeping it simple first, keeping it basic first, focusing on the absolute best of the best first, which means that even with odds favorable momentum, when price reaches these yellow 1-to-1s and all of the triggers remain above, guys, just sit on your hands. I don't know what's going to happen. I don't know if it's going to bounce, if it's going to dance, if it's going to break. The reality is that I'm not in control, and I'm cool with that. That alleviates a lot of the burden of guesswork. From these 1-to-1s, price absolutely rockets up. But notice that all of my triggers remain below resistance. I'm not going long and I'm not going short. And then resistance holds and it pushes back down. But we still haven't broken support. And you get this little dance, this little fight between the buyers and the sellers, guys. Decisions are being made, and what they're doing is they're jockeying for position here. Somebody's going to win. We don't know who it is. That's your 90%. That's your 90% of doing nothing. 90% of being patient. 90% of letting those freaking amazing rules keep you out of trouble. Eventually, everything is green, right? We're looking for long trades. Eventually, I get odds favorable momentum, and eventually all of my triggers are above resistance, and it's now acting as support. And guys, there's your tail. There's your 10%. There's that entry for the highest probability trend trade that you can take. You guys are going to pinpoint where the bottom of that tail is most likely to happen, and you're going to be able to ride that wave of momentum all the way up to the key Fibonacci area more often than not. This is the best of the best, guys, and it's what you don't do that's going to dictate how much of the best that you get to keep, really. If you lose $1,000 here and you only make $500 here, you're down $500 from decisions without advantages rather than just being patient and waiting. So those are termination condition, guys. They happen all day. They happen every day. They're easy to recognize. Price reaches, no triggers, sit on your hands. Look what happened on the smaller, faster chart. Looks like a seismograph, right? There's your fight between buyers and sellers. Large chart doesn't show it so quickly. Right into support, absolutely no triggers break. This is the S&P. Let's see if crude oil does it. Support to resistance, support, a little bit of overrun, back to support, right up to resistance, to the mid-band, back to resistance. Look at the bounce, and now they're kind of working their way up. Key fibs, guys. Not only do the people that move the market know where they are, you guys know where they are. You guys know exactly where the market is likely to stop, where it may reverse. NASDAQ has been an unbelievable fight all the way up. All the way up. The large chart never blinked. The large chart always set up. The small chart showed the indecision between the two forces that fight. And that's going to bring me into the final termination condition that I talk about. And guys, this termination condition is not a large chart termination condition. This termination condition is a small chart termination condition. This termination condition uses the idea of divergence, that loss of momentum. And this small chart termination condition is going to help you identify change that's happening on the large chart before it actually happens. So what we're going to use on a small chart, we're not using those lines, fibs, mid-bands, all that good stuff. We're using divergence, and 3 divergences in the same price range may terminate the trend. 3 termination conditions means 3 losses of momentum. And if you see that in the same basic price range, it may create a push against you. It may completely change the market. Sometimes the large chart fib overruns a little bit, and these 3 divergences let you know that it was overrun. And sometimes the sellers had a number we didn't know about, and they're going to push down from those 3 divergences. So 3 divergences in the same price range may terminate the trend. It takes away the advantage of a clear path. 3 divergences becomes an even more powerful indication when your small triggers work their way inside of the large triggers. When you have those anything can happen triggers on a smaller, faster chart coupled with 3 divergences. And it becomes even more powerful still when that 3rd divergence pivot is higher than the previous from a low, or lower than the previous from a high. That's a head and shoulders pattern. And you'll see it on these smaller, faster charts. And it'll help you identify, for example, from a low or from a high, those 3 divergences are going to help you see on that large chart when things may be changing, but that broad stroke of a brush isn't capable of giving you that information. The other thing 3 divergences are going to do for you is if you took that great trade, or maybe you took that medium probability trade. You can't see it. Can you guys see my cursor moving? Nobody? Let me see if I can. No, sorry. Let me see if I can fix that. I'm looking for settings, guys. Here, I'll tell you what. Let me shut it down real quick, and let me bring it back up, and let me know if that helps. Ron, thank you for the heads up. All right. I'm back in. Can you guys see it now? I'm dancing. You guys can see my screen though, right? No? Shoot, dang heck. Okay, hold on. There's gotta be a way to fix it. And I'm not gonna lie, guys, I'm not sure how. No, parts do start to go bad when the warranty runs out. All right, Cam's in the room though, and Cam will say, hey, Mark, this is how you fix that, because Cam fixes everything for me. Let me go to my settings real quick on the screen share, and let me make sure that there's not something in there that may help. Custom, screen, streaming channel, go live. Yeah, you know what? I can't see it on mine either. So let me see something. If I take this picture though, you guys can still see the picture here, right? And you can still see 3 divergences in the same price range. The drawings are coming through, right? So 3 divergences from a low, 3 divergences from a high. You guys can see that even if you can't see my arrow. Guys, if you're in the perfect short and 3 divergences print, that's a great idea to get out of the trade. If you're in the perfect long and 3 divergences print, that lets you know that it's time to take an exit. So these 3 divergences on the smaller, faster chart, the only termination conditions that I respect on a smaller, faster chart. And I'm going to tell you guys right now, 3 divergences is what it takes on a smaller chart to terminate a trend. 1 divergence, doesn't worry me. 2 divergences, couldn't care less. 3 divergences, all right, I'll exit my condition. And we're going to have a great picture of that in a little bit from a chart that someone was nice enough to share. And that you'll be able to use that for management. This is bumming me that it's not working. I don't want to completely redo Discord though. And I'm looking to see if there's anything that will show my cursor, and it doesn't seem to be. So guys, we're going to focus on 3 rules, right? We already have strong triggers. Oh, let's see. All right. Cam's my hero. I don't know if you guys know this. Let me see if I can find my mouse. I'll type in mouse. Yeah, it's working fine on my end. I just want you guys to be able to see it. All right, here we go. Mouse pointer style. It's giant. Anybody? Not so much? All right. I made it like a 75 font. So it's got to be a Discord issue, guys, and I apologize for that. I'll make sure that I take pictures and draw boxes today to make sure you don't miss out on anything. But right now we're going to talk about, we have strong triggers on the large chart. The large crowd set up, right? Let's go to the 2 chart picture because this really shows the setup for a trade. The most current bar is green. The background is green. I'm only looking for long trades. My small triggers are above my large triggers. There's space between the 2. Rule number 1, the advantage of momentum is in place. Price has not reached an area. Therefore, rule number 2, the clear path is in place. So what I need to do is use my smaller, faster chart. I need to refine that 1 bar down to the point where the market is most likely to continue. Guys, I can completely shut down the room and restart it if this is difficult to follow. Let me know. I'm more than willing to do that. It just means that you may have to jump back in. Rule number 3 says that we're going to use a limit order, that we're literally going to be able to wait for the market to come to us. And we're going to use a limit order to buy or sell a pullback. Everybody remembers the small crowd pushes against what the large crowd's doing. That little run down against everything going up is what we call a pullback. And we're going to buy that pullback at an area inside of favorable large triggers. And that language right there is very important. We take trades from lines. On your small chart, we look for Fibonacci support or resistance. We look for yellow 1-to-1s, or we look for mid bands. And the idea is your highest chance of success comes when those areas are nestled inside of what we call favorable large triggers. And favorable large triggers means that your synthetic triggers and your large triggers are one on top of each other. They are riding piggyback. They're overlapping. You can see in this picture that the large triggers, the smooth dash triggers, and the synthetic triggers, the stepped dash triggers, these are one on top of the other, guys, and it's creating your smallest window of opportunity, which provides you the absolute smallest area where the market is most likely to continue. And that's rule number 3, is getting into the market at those areas inside of favorable large triggers. So when the large chart says go, when the large chart says that everything is up, when your momentum is the strongest, when there's nothing between you and your target, this is going to be the look on your smaller, faster chart. And you're going to look at odds favorable momentum, even on that smaller chart. You're going to see smalls outside of the large. You're going to look at your large triggers and your synthetic triggers. They should be one on top of the other. And all you're doing right now is you're looking for areas, fibs, mid bands, yellow 1-to-1s. These are the areas that you're going to be watching. But you need for that small crowd to do their thing. You need for that little pushback. And the pushback begins with a reversal bar. And a reversal bar is just a down bar after all those up bars, a red bar after all those green bars. But what it does is it kind of signals that that fight is beginning. And some traders will use their drawing tool. But what you're doing is you're going to create your window of opportunity. And in a long trade, your window of opportunity will extend from your highest point of support. Andy, glad to have you. Tomorrow, your super speedy setup's arriving? Yeah. So tomorrow, I'm going to be looking for pictures from you. And I'm going to be looking for a boatload of questions from you, Andy. Welcome to Nexgen. This reversal bar signals the pushback. At the time of the pushback, we're going to create a window of opportunity. From the highest point of support, that green mid band is closest to price, and the lowest point of support, those yellow 1-to-1s, are furthest from price, and they're inside of favorable large triggers. Guys, this is where the market is most likely to continue. This is where you are going to put a limit order right at the top of the window. And this is a real important part of what we do, is the large chart said that we had odds favorable momentum, right? And this is weird without a cursor because I realize that I rely on my cursor a lot. Large chart has odds favorable momentum. The large chart had no termination conditions, absolutely nothing between you and your target. So on the small chart, I wait for the reversal bar. And at the time of the reversal bar, I'm going to look for my favorable large triggers. I'm going to look from the highest line of the triggers down to the lowest line of the triggers. And this is where I'm going to look for my areas. This is not where the market is most likely to continue. The market is most likely to continue from the highest point of support, in this case a green midband, to the lowest point of support, those yellow 1-to-1s. And this little shaded white box represents my bounce point, where the market is most likely to continue. If the market pulls back to that highest point of support, that midband inside of favorable large triggers, I'm now in a long trade, guys. This is your entry for the high probability trend trade. This entry has the advantage of momentum. It has a clear path. And now you're in where the market is most likely to continue. This is where I want to see you guys getting in the market. You brand new users, I want to see you in the market in this spot every day. This is it. That's your best of the best. Don't ever hesitate. And here's some cool stuff that happens is sometimes it pushes beyond. We are so good at Nexgen, but we're not down to the tick good every trade. So it may go to the second level of support, or even the third, or even the bottom level of support. And if it does, you're cool. You're still where the market is most likely to continue. But one of the biggest advantages of what we do, and this methodology that's been proven over decades, is that if we know where the market is likely to continue, we also know where the market shouldn't go. And you guys are going to place a protective stop right outside of that point, about 4 or 5 ticks below the lowest point, the lowest bounce point inside of favorable large triggers. And the reality is, guys, and this is such a tough pill to swallow for some people, is that every now and then that stop's going to get hit. Every now and then you're going to take a loser. Every now and then you're going to have to go back and reanalyze your chart. And you're going to have to say to yourself, whoops, there it is. Did I follow my rules? Did I have a statistical advantage? Did I have momentum? Did I have a clear path? Did I take the correct entry? And if you did, guys, you're just going to go, well, anything that wins 70 to 80% of the time, it's going to lose 20 to 30% of the time. Let's get rid of one of those zeros for a little honesty here. And this becomes a cost of doing business. And what happens is this cost of doing business becomes easier and easier to accept. It becomes easier and easier to be okay with these small losers. First, because we're managing risk before we ever manage profit. We're not taking huge losses. We're taking very calculated losses when we have that cost of doing business. You're also going to recognize that these losses are a normal part of a positive equity curve, and it will be rare, even on the days where your goals are hit, that you don't have a loss or two in there. And then finally, you're going to understand through a little bit of study, through some repetition, that by getting in at the area where the market is most likely to continue, you're never going to want to miss it. Because the opposite side of 20 to 30% losers is 70 to 80% winners, right? Profit target reached. And once that trade begins to work its way in the direction of the overall trend, of the momentum, of the clear path, you can actually reduce your risk a little bit below that reversal bar. Give yourself a great opportunity to manage your risk even further. So guys, this is your high probability trend trade. This is your first 20 days with Nexgen. And all I want you to do is just study it. I want you to go back and circle tails on the large chart. And I'm going to show you how to study, how to build a little bit of trust. And NASDAQ will not be the way to do it today. When the large chart says that you have odds favorable momentum, when the large chart says that the path is clear and you see a little tail, circle it. And when you circle it, what you're going to find is that if it pulls back to resistance inside of favorable large triggers, you have a high probability trend trade. You have a trade that wins more than it loses. You have a trade that creates confidence through the memory of success. The other thing that you'll recognize is that sometimes you have to be really patient because it's not setting up the way you want it to set up. You're going to realize that you have to be patient because 90% of the time, you're just waiting for those advantages. But when a termination reverses the market and gives you odds favorable, even maybe without the clearest path, the smalls are through, but the large are not, you can see that price pulls right back to support inside of favorable large triggers. You can scroll back 10 days on your large chart, circle every tail that fits the rules. If you line it up with the small chart and it's inside of favorable large triggers, this is your highest probability trend trade, guys. This is your best chance of success. Termination creates a reversal. Reversal provides you odds favorable. The area has the potential to break. So you don't sacrifice momentum on the small chart, no divergence. You don't sacrifice a tiny window of opportunity. It's just a couple lines wide. You take this trade without hesitation and you enjoy that momentum all the way up to the key area, guys. And this particular trade was worth about $500. Not a bad trade. But you've got to develop trust. And going through and circling tails is one of the best ways to do it. Going through and circling tails is going to get you looking for those advantages. Going through and circling tails is going to allow you to historically study. How did it set up? How did it look? Was this the best of the best? And as you do that, I'm going to give you a checklist. I want you to get in the habit of policing yourself. Is the market coming from a good top or bottom? Did you have momentum? Were there no terminations? Is there an area inside of favorable large triggers? Guys, this is the most boring, successful trade in the world because it takes a while before it sets up. But if you can mark yes to each and every one of these, I've never had anybody not do 70% winners or better, ever in the history. So this checklist is great to print out on your desktop. I'm dropping it in the room right now so that you can police yourself each and every trade. Or if you're going back and doing it historically when the market isn't moving, you can go back and double check. Well, do I have the rules met? If you do, take the trade, circle it, make sure. The next checklist is the exact same checklist, but I've given you pictures of what it means to come from a good top or bottom, what it means to have odds favorable momentum, what it means to have a clear path, and what it means to find that window of opportunity, that area where the market is most likely to continue. And this is something that you can study for a few minutes every morning and make sure that you know what it is that you're looking for. Guys, recognition comes through repetition. It comes through doing the same thing over and over and over. And that's what this classroom is designed to do. This classroom is designed to let you take 3 rules, to do it on only 2 charts, and then put yourself in a position to become a confident trader. And your path to a confident trader, guys, now that we've talked about the rules, is going to be you posting pictures in the room every day. Win, lose, or draw. Good trades, bad trades, rules met, rules broken. It doesn't matter. I don't judge you on what you do. I only judge on the advantages present. But the more you post in the room, the faster you're going to get to where you want to be. And every time you post in the room, I need you to tell me why you did what you did. I want you to show me both charts. I want you to say, hey, everything's set up, so I went up, right? Even if it's not following the rules, there are no wrong answers. Show me where you got into the market, because the reality is we might be able to work together to find a better entry. Maybe an entry that has lower risk, maybe an entry that has a higher profit potential, or that doesn't fight a couple things. And then show me where you get out, because what you'll find is that as you develop trust in the large chart leading the way, there's a lot of opportunities that we forego, maybe because of small fluctuations on the smaller, faster chart. So use this template every time you show me a picture in the room so that I can give you the best possible feedback. And then Nexgen's provided you a spreadsheet, guys. And this spreadsheet is a trade journal. In this trade journal, I completely underestimated the power of this trade journal. I completely underestimated how important this would be as a part of my education process. This is designed every time you take a trade to put the trade into this journal, to have a picture of the trade so that you can see it, the annotated chart. It asks you how you feel. Were you relaxed, confident, nervous, bored? Were you jumpy? Because that's gonna reflect heavily on whether or not you're following the rules. What worked, what didn't work. You're beginning to recognize the patterns that are bringing you success. And as you do that, you're also going to recognize the things that aren't bringing you success, the things that may be hindering your forward progress. And then what you don't recognize, I'm going to recognize through your pictures, guys. One of my talents, believe it or not, is recognizing patterns in people. I will know within the first week, after about 15 pictures, whether you're aggressive, whether you're timid, whether you follow rules, whether you break every rule. And I will continually try to nudge you in the direction of the most effective statistical advantage. The feedback that you get, drop it in the notes section. Red News in 1. Thank you, Ron. Maybe you had the perfect trade. Maybe you broke a rule. Maybe you exited early. Maybe you got in too soon. But what you can do is you can study these notes, guys, in a brief historical study each and every morning. Pour your coffee, check your news, and look at what you did yesterday. It's going to prepare you for the day. It's going to accelerate the learning. It's going to put you in a position to get to where you want to be faster. So post your trades, track your performance in that spreadsheet. And then I'm going to give you guys my spreadsheet right now. Good morning, Paul. And my spreadsheet not only has the tracking, but it has my favorite look. So as you guys do your study, as you go back through market replay, as you go back and circle tails, as people post high probability trend trades in this room, start filling up your personal trade setups. What are the looks that are going to get you into the market? And what you're going to find is that you may stray away from the high probability trend trade. There may be other things that appeal to you. Advantages through your chart reading that can be turned into profitable trades. So you're building your trading plan. You're going to build a plan on management. You're going to build a plan with the patterns that you recognize. There's a whole section dedicated to termination conditions. And guys, all this stuff is great. All this stuff is you developing a plan that suits your needs. And then under client trades, the final one, I've got about 270 pictures of high probability trend trades, of medium probability trend trades, of outstanding management, of not so great management. But these are Nexgen clients using the software, reading their software, using the advantages, and executing beautiful trades. They're not all going to be your trades, but you can see how people are using it. And I think it builds confidence and a lot of recognition because you'll see the common threads between momentum. You'll see the common threads between entering at areas. There's a section that revolves around NASDAQ. Guys, I'm going to tell you right now, the S&P and crude oil are the easiest ones to learn on. NASDAQ moves a lot faster. So be comfortable with the basic looks before you try to branch out. There's a whole section on management. What you're going to find is every great entry creates a manageable trade. So sometimes it becomes appropriate to hold longer. This was something that a client gave to us or presented in the room, and he had odds favorable, and he had a clear path, and he takes the perfect entry, and he exited for 5 points, which is outstanding. I'm not going to lie. That's a $250 trade. And he got all the virtual high fives. He got a gold star, loved everything about it. And then I just said, hey, look at the momentum on your large chart. Look at the clear path on your large chart. This becomes an opportunity to turn that $500 trade into a $1,000 trade. And you have the opportunity to make an awful lot more as that market runs down to Fibonacci support because of all the momentum on the large chart. And this is day over at 10:04 a.m. Go swing some golf clubs, right? Rather than waiting for the next great thing. So every picture that you post is going to be an opportunity for us to talk about management, for us to talk about entries, for us to talk about patterns that repeat themselves, for us to talk about termination conditions. So it's important that you post in the room. We just learned the rules for when it's okay to trade. You guys are going to simulate, and I want you to practice the right rules. Don't try to impress your friends being a simulator millionaire. I don't think anybody has ever tapped a wine glass at a reception and said, by the way, did you notice that Ron made $1 million for $10 last week? Oh, let's all celebrate Ron, right? Post them in the room. Let's make sure you have the correct rules. And then we're going to simplify, guys. We're going to talk about a high probability trend trade all morning, every chance we get. We're also going to talk about a medium probability trade, that 50-50 trade. I'm about to give you a plan to take both of them. What looks are you going to commit to? You got to learn them so that they become easy. That's the key, guys, is make them easy. And I'm going to tell you, that's what the spreadsheet's designed to do. When you see these darn pictures over and over and over, when you fill up your spreadsheet with all these amazing trades, it starts to become easy. The market starts to slow down. You start anticipating your entries before the reversal bar ever prints. And I've seen it happen with pretty much everyone in this room, guys. So use the spreadsheet, participate, and then here's your plan. This is a plan that's designed to be a stepping stone. This is a plan that's designed to optimize your chances of success with that high probability trend trade and that 50-50 trade, that medium probability trend trade. But through simulation, through study, through class feedback, continuous practice, you are going to craft a plan tailored to your personal goals, guys. You're going to come up with the Lyle plan. You're going to come up with the Jose plan, with the Chef plan. And it's going to be a byproduct of your ability to read the indicators of your chart reading, the things that you see easy, the things that come to you naturally. And you're going to see it in the room that there's people that love the idea of momentum. There's people that love the idea of a clear path, but they don't want to wait for a pullback. And they take little chunks in the middle and they do it really well. So this is your simple one. You're not shackled to this. You're not obligated to it. And again, I've never had anyone follow it to the letter and not be successful. Something to think about if you're really in this to make money, if you're really in this to win more than you lose. But your simple plan for consistency, guys, it starts, don't fight the large chart direction or triggers. I put that in all caps. I put that underlined because this eliminates 60 to 70% of the mistakes that new users typically make. We are all prone to trading our opinions rather than what the indicators are telling us. And this is the biggest safeguard that I could ever come up with, is if you're never fighting momentum, if you're never fighting that direction, what you're going to find is you're going to learn to be patient. You're going to learn to wait for that best of the best. I want you to spend 20 days, 2 weeks, whatever. Focus on your entries, however long it takes. There is no right answer. Focus on getting in at the point where the market is most likely to continue. Make sure that you can string together these advantages for an entry. That is the first piece of the puzzle, guys. That is the beginning of you becoming a confident trader, is being able to pinpoint where the market is most likely to continue. This is very mechanical. It's very methodical. It's very pragmatic. It is nothing more than if-then. If I have odds favorable momentum, then I will look for no termination conditions. And if I have no termination conditions, then I will look for an area inside of favorable large triggers. Congratulations. So you're up $100. So Lyle, your job is to post both of those pictures in the room, and let's talk about them. Let's see what you did, what we can do better. Once you learn to pick your entries, guys, you have to manage it. And management comes, it's a little bit harder than entries for most people in the beginning, because once you're in a trade, it's scary. The idea of losing money is scary to most people, because most people just don't have money to lose. So you manage your risk first, guys. You manage it. Oh, I'll show you. We'll do a picture thing right after this hour's done. You manage your trades first through great entries, through knowing where the market is most likely to continue, because it lets you know where the market shouldn't go. And that's where your protective stop goes. And that is exactly all you can do in this situation. You can either get stopped out, or the market can go in the direction of the trend. And if it goes in the direction of the trend, well, then you're going to put a new stop just above that reversal bar, a couple ticks. Lyle, do me a favor. Go to the search bar on your computer, and I want you to look for TechSmith Capture. It was downloaded when you got the software. And if you'll open it for me, this is how you and I will have a conversation. And I'll run through it in just a second, how to use it. So guys, the market starts doing everything that it said it was going to do. The market starts showing you that it's going in the direction of the trend, that it's going in the direction of the momentum, that it's going in the direction of the clear path. And then from there, there's nothing to do once again. You're just managing your risk. You're setting yourself up to be able to take a smaller loser if the market decides to be wrong. You've got 2 profit targets off in the distance. You've got minimized risk. Absolutely. So Tony, the way it works is I go through the first hour. I go through the rule. I go through the advantages. And then typically I stand up and stretch my legs for just a minute, encourage you guys to do the same. And then right around 10:15, 10:20, I will go through all the pictures that are posted. I'll do them in order, and we'll talk about them. But if you ever feel like maybe I missed a picture, or maybe I accidentally skipped over your picture, man, get real vocal. Let me know, because sometimes I miss things. I don't ever want to miss them. I want you guys to always get the feedback that you need. And I'll always call out your name when I get to your picture. So if you're looking at something else and not the screen, you'll probably hear your name. First profit target, guys. If I enter at the area, then my stop is outside of the window of opportunity. If I get a reversal bar, then my stop is a couple ticks above that reversal bar. If it hits my first target, which is only $100 off in the distance, a very measly, easy to hit $100 off in the distance, then I move my stop to break even. Guys, this is designed to do a couple things. This really small target is designed to create some confidence, to make you feel like a winner. It feels good to get paid. And when it goes in your account, they can't take it out. It's yours. And then going to break even is absolutely asinine. You're going to get hit break even a lot. But remember that you're developing the ability to read charts. You're developing the ability to learn to trust the large chart. And going break even makes it easier for you to hold for that second target because it was the large chart that had momentum. It was the large chart that had a clear path. It was the large chart that said you should be looking for that entry anyway. So by going break even on a trade, by getting paid quickly, it makes it easier to sit on your hands and do nothing, to roll away from your monitor and see if it hits the second target. And if it does, it's only $200 off in the distance. Once again, the whole idea is to create this euphoric just confidence through the memory of success, guys. In a $300 trade, when everything is perfect, you're going to watch it run past that $300. And as you learn to read your indicators, you're going to learn how to hold for bigger moves. But a $300 trade is a pretty outstanding trade. And just one of those a day produces a $1,500 week. And a $1,500 week translates into a $6,000 month, which is a $72,000 year from just taking that absolute best of the best, from managing it assertively and pragmatically. And guys, this is the goal for the new user. Just get to the point to where you're comfortable entering the market, where you're comfortable moving your stops a little bit, and doing it for a reason, not out of fear. Because all you're doing is developing the ability to read your indicators right now. You're getting that chart read down so that you're comfortable. And there's your plan. I just dropped it in the room. You're not obligated to use it. It's a great foundation, though, guys. It's a great way to start learning how to read the indicators. All the checklists are in place. This is your path to becoming a confident trader ASAP. Embrace it. It works. It's been proven over decades. Your trend trade checklist has been dropped in the room. You're using tails to study. Once again, guys, I'm trying to give you everything that you need to be successful. The only thing that I can't give you is repetitions. The only thing that I can't give you is experience. That is your burden. Your burden is to go through and test these theories, to try to prove them wrong, to make sure that the advantages are present, and that things look good each and every time you take a trade. Whether it's crude oil or whether it's the NASDAQ trading directly into termination conditions, or whether or not it's the S&P coming right off that termination. Remember when we talked about this right at the beginning? Absolutely no shorts, don't do it. It's going to crush you. And sure enough, look at that giddy up to the upside. And now we have odds favorable, and we have an area with the potential to break. And we do have areas inside of favorable large triggers, guys. So I'm going to leave you with the S&P. You can watch it. Looks like news created a little bit of a spike there, right in the direction of the triggers, of the trend, of the momentum. Large chart leads the way. When I come back, we're going to start going through the pictures that you guys have posted. We're going to revolve everything back to advantages. Did you have momentum? Did you have a clear path? Did you have an entry area? If it is outside of the high probability trend trade, guys, I really appreciate you telling me why you did what you did. It allows me to give you better feedback, and it really helps me keep this room an educational room, because no matter what type of trades you've taken, we can always go back to these simple concepts of the three rules. And then that's it. Go stretch your legs, guys. I'm going to take 5 minutes. Hopefully everyone can hear me. I am going to reboot Discord with the hopes of getting my cursor back. So you may get bumped. And if you get bumped, you're going to have to re-enter. So here's your warning. I hope everybody heard me. I don't want to miss out on anybody, but I'm going to reboot, and then I'm going to take a couple minutes and fill up my water, and then we'll get going on that second part of the classroom. But before I go, Lyle, did you get your capture software up? Were you able to find it? And anybody that's new, does everybody have their capture software? Does everybody have the ability to take a picture? If you don't, I'm going to talk about it. So I'll be back in about 5 minutes, guys. I'm going to reboot Discord. It is going to kick you out, and then it will let you back in. Back in just a minute, guys. So I have to say rules not met on that one. And then over here, I love it. Momentum trade has nothing to do with anything. Again, you're letting this market flow chart talk you out of everything, Jose, or talk you into everything. The perfect high probability trend trade doesn't work. Everything is up. You take the perfect entry and you let this chart terrify you. Right? Isn't that crazy? Everything says up. The triggers are up. It's going up. Everything's up. You break the area. You pull back. And you let this one take you out, but you don't let this one get you in. Does that make sense, Jose? You let a white bar take you out, but this is the same thing you look for an entry signal, right? Which means that you're using market flow right now to try and confirm your gut, not your indicators. I know because I've done it. And then directly into terminations with everything up. Absolutely no HVA rules met. And it worked out. I think you're right where you need to be learning the market flow. And the biggest lesson, man, large chart has to say it. Large chart says large chart every trigger's above 2 levels of support. Large charts green mid band, support, large up, synthetic up. Everything says up. And you got so excited about one pink line that you took the short. That's what we need to eliminate from your looks there. Let the large chart lead the way. Let the rules be met. Look for confirmation. And then Cav, everything says up, so you take a little pullback and you get paid when everything says up. Nicely done, Cav. You found your mojo, man. You definitely found your mojo. Jose, I hope that's helpful. You're just trying so hard to make the market flow chart valid that you're forgetting that you've got 2 other charts that lead the way. And then Dwight, looks like you went long directly into resistance before it broke, and it got you on the pullback. I know you didn't want to show me that one, but I see it anyway. And then here, you waited for it to get to the other side with all the momentum, and it was damn near effortless on a little momentum style. I love it. 13 to 26, so 3 points is $150, right? And that one looks like it was like in the middle of the night. You woke up. Yeah. Great job. Isn't this one easier? That one's so much easier when everything says go, when everything is up, when everything is strong, when everything is clear. Gosh, it's easy. Tony, you're working me on that large chart, man. It's hard to read it. When you set this pending order, the long-term chart was all green and up. You set an entry at fib support and TP at fib resistance. Wasn't sure where to put a stop loss, and risk was greater than reward. It was successful, but you'll look closer at reward to risk next time. It's hard to see what's going on your large chart there. This was the ES at 5:30 a.m. I'm just going to go back to the ES at 5:30 a.m. That can't be it. What time zone are you in? Oh, that's 2048. What market is this? It's definitely not the S. Okay, that's gold. I don't have it. Will you do me a favor on your large chart, Tony? Just stretch it a little bit for me. It's really hard to read. It looks like it's up, right? It looks like it's odds favorable momentum, and it doesn't look like there's any fibs there. And it closes the gap back to support. It closes the gap back to the synthetics. You get in at the lower end of the window, And I think that your first target is covering that fib. So it's a 50-50, right? Large triggers below, small triggers above. You have momentum. It's a good shot. And then there's that momentum loss through the divergence line. And that's the one on those 50-50 trades. It can be a killer for sure. It can at least create a little bit of a stutter and maybe a deeper push. I like the look between the two. It's a solid look. You're at the bottom of the window. Risk is virtually nothing. And that's a great way to take one of those 50-50 trades. But because you did have a fib at 48 and the smalls were through and the large were not, it goes into that medium probability scenario. And one of the easiest ways to take those 50-50 trades, you had absolutely everything met except for the no divergence on a 5-1, which means that you really got to manage it a little more aggressively in case things change. And it sounds like you were able to hit your target at the trouble spot, which is an awesome skill to have, to not sit there and be greedy and hope and say, well, I took the trade, therefore the market owes me a push all the way to 2054. You're like, let me make a quick 120. We'll shut it down. We'll wait, see what happens, and we'll come in for another 120. Really nice job, though, Tony. You're trading with momentum. You're trading with direction, and you're trading from areas, which means that you're actually using the software the way it's designed to be used. And then termination, 2 divergences, kind of confirms that may be a bounce point. We'll see what happens. Crude oil came all the way down to Fibonacci support to the tick. Awesome, man. That makes me happy. And when it got to Fibonacci support to the tick, all of my triggers were above. Therefore, nothing to do. And then the NASDAQ had some weak triggers in the middle of nowhere. And look at that, 2 divergences and weak triggers. And I'll be darned, it's pushing lower, isn't it? Guys, patterns are everything that we do. Patterns are 95% of your day. Just sitting and waiting. It's just sitting and waiting for those patterns to give you everything that you need. And then when they do, hop on it. Take advantage of it, right? Pretty cool. What do you guys want to talk about? That's all our pictures. And I'll tell you what, the pictures are great, guys. You're doing a lot of great things with them. You're showing me a lot of understanding of the rules. You're showing off a little bit, and I like it. Everything goes back to advantages, right? Everything goes back to whether or not you have momentum, whether or not you have a clear path. Start speaking in terms of advantages, and what you'll find is that you'll begin kind of policing yourself a little bit. You'll look at your large chart and you'll say, well, I don't have momentum. That's the first step, right? I'm trying to turn this into a lesson. So let's do this. The first step, let's go through it here, is understanding whether you're going up or down, right? The market's going up. Therefore, I'm looking for odds favorable momentum to the upside. And there's only 2 options. You either have it or you don't, right? And if you have it, if you're like, everything's green, I need this. This is my look. If I have this look, well, then I need this look. I need the clear path. And that's the most remedial way of getting into the software. I have to have this so I can look for that. But then you start coming into speaking in terms of advantages. So you say to yourself, well, I'm looking at my large chart and I have strong triggers. And you'll start talking about what that means to you. You'll start saying, well, this is a market that's likely to continue in the direction of the trend. This is a market that has the potential to break areas with all that strength. This is a market that is my best of the best look for looking for an entry on that smaller, faster chart. And you start speaking to yourself in terms of these advantages, which means that the way the brain works is you're going to start speaking to yourself in terms of what does it mean if you don't have strong triggers on the large chart. You may say something like, well, it may not continue in the direction of the trend, or this is not my best look to potentially break an area. This is the look that creates deeper retracements, that pushes me beyond the best. So your momentum advantage is not only hey, this is how good it can be. It is very much well, this is what I'm up against should I decide to take a trade. Your clear path. When you look at a clear path, when all your triggers are going, you haven't reached an area, you're going to begin to say things like, with that momentum, it's more likely to continue in the direction of the trend. It's more likely to push to that next key area, to that next decision-making area. And then the flip side is you'll start saying, well, I don't have a clear path. This could stop the trend. This could create a bounce. This could create a decision. Is it worth it for me to hope that it breaks? Is it worth it for me to trade into an area that I know is capable of ruining my trade? Should I do it, or should I simply wait? And then the same thing with the entry areas is you'll start talking about it in terms of, this is what the best one looks like. This is the bounce point. This is great. And then you'll start talking about, in your head, well, this line is below those moving averages. This line is below those best of the best areas. This one is telling me that the market's pushed outside of the best of the best. So you'll relate everything back to advantages, and you'll start this process of what it means to have them and then what it means to not have them. I don't have a clear path, right? And I don't have odds favorable momentum. So I'm not hoping that this red line breaks. I do have an area inside of favorable large triggers. Am I willing to forfeit two of the most important things to my trading to take a trade into an area that may hold? And then, Dwight, the highlighted area, you saw this a few times. Hold, what's your take on it? Well, I just talked through my take on it. And let's do it again. So when I look at your chart, I don't have odds favorable momentum, right? What breaks things? Strong triggers break things. Weak triggers bounce very often. I also visually see two losses of momentum in weak triggers over here. So on a scale of 1 to 10, my momentum's like a 3, maybe. I don't like that. And then I've reached Fibonacci resistance, and not one of my triggers have broken through. So on a scale of 1 to 10, my belief that that area is going to break in the moment is an absolute 0. I've got weak triggers and I'm going into a fib. And then your brain says, but look, Dwight, it went right back up to it. Man, you could have fought a loss of momentum. You could have fought a termination condition. And damn it, Dwight, you could have made $150 if you happened to catch it at the lowest tick and got out before all the shenanigans started again, right? So, Dwight, you've got $150 to make it through the next month to eat, right? That's it. That's all you have is $150. You either starve or you ramen it and you feel good about it. Are you willing to risk starvation on this look? Are you willing to keep your kids out of college on that look? Are you willing to not make your mortgage payment on that look? Or does all of this strength and clear path let you know that you'll be supersizing instead of just eating ramen, right? Think about it like that, guys. This is your money. It's ticks on a screen, right? It's ticks on a screen. That's all it is. But the reality is this is your investment. And if you speak in terms of advantages, is my investment worth trading into an area that's been proven over and over to be capable of stopping the market? Check it out, Dwight. Stopped it, stopped it, stopped it. Holy crap, stopped it, stopped it, stopped it, stopped it. I know that's hard to say a lot. Stopped it. All these times, rule number 2 would have killed a trade, and your brain is telling you, but Dwight, this could be the one. This could be the one where rule number 2 has absolutely no bearing on life as we know it. Take the trade. Take the trade. What could go wrong? Take the trade. If you win, you're a freaking rock star. Women will adore you. Men will want to be you, and children will sing songs about you, Dwight. No, they won't. Everyone's going to go, that damned Dwight trading into termination conditions. But that voice is real, isn't it? Man, that voice. If only this will be the one that breaks all my rules and works. If only this termination condition with all that momentum decides to break. If only. Guys, I'm telling you, everybody in this room is going to wrestle with that little demon on their shoulder, that little devil on their shoulder. I spent the whole morning taking pictures of devil on the shoulder. There's market flow charts saying go up. There's all my other charts saying you've got termination conditions for days. Which one do I listen to? It's only a small loss. It's just 3 ticks. It's only $100. It's only adds up. Guys, this is what I did this morning. Oh shit, I may have missed my entry. Never mind, it's still a bunch of terminations. Everything says no. Oh, it's gonna happen, right? And how many times can I guess before it's game over? Guys, I literally was taking these pictures this morning in the NASDAQ. And I was laughing because in my head, I could see the angel and the devil on my shoulder. And that devil will try to get you to break your rules every time. And that angel has the tiniest little voice. Once again, there's your termination condition, right? But there's no divergence. But look at the mid-band. But it's a giant blue fib with absolutely nothing through it. It's okay to not get paid on every move, you know? Termination to the freaking tick, once again. Are you starting to believe in the power of termination conditions, ladies and gentlemen? Are you starting to believe that we're not the only ones that know where these Fibonacci areas are? And even though we are freaking awesome, somebody with deeper pockets than us said 17,037.99. You better believe I'm taking everything out. The seller that pushed here said that's where I'm going. And look what happened. You just got to see it enough to believe it, guys. And I hate to say this. My brother told me once, a few years ago, when I was learning to trade and I was taking all these unnecessary chances, when I was ditching all of these, or I was taking all of these trades without the momentum. He told me, he said, Mark, someday you're going to get so sick of losing your money that you're going to follow rules. And it's funny. Because eventually you will get so sick of losing your money that you'll follow rules, that you'll stick to a statistical advantage. But you don't know. And this is my next big point. You don't have faith in the idea that weak triggers can push lower until you see it 100 times, 1,000 times, until you lose money in this situation. You don't have faith that this blue line is capable of stopping all that momentum until you take this loser 20 or 30 times and you're like, that stings, and I knew that it was a rule. And then you'll follow your rules for about 30 days, and then you'll say, I can break them now, I'm good, right? Let's go ahead and break them. And then you just get beat up all over again. But eventually your scope of what you're willing to do changes. So, Jose, this is the NASDAQ. You had a weak top, maybe a little bit of overrun. That is a super high risk HVA short. Once again, putting all your eggs in the basket on the pink line. Just because I'm a rules guy. I know you're taking an HVA trade. If not, that's cool. But one of the biggest things on the HVA trade is don't break beyond the area. Don't let the trigger lines break beyond the area. It does create challenges, very much. And then your large triggers are still up. Your synthetics are still up. They're still above the area. Okay, never mind. I'm sorry. I read the rules. That was my bad. It's also silly to fight small triggers on the NASDAQ, right? Wouldn't you agree, Jose? that if your small triggers are up really, really strong, isn't that the same look that gets you into momentum trades with that look? So by the rules of simple, if I'm willing to take a momentum long because of this look, does it make sense to go short into it just because I think the market should be going down? I love this one, Jose, where you're a little patient, right? You're a little patient. You have the momentum to support it. You have the 50-50. And then you get that 50-50 with divergence right off of a fib. And I don't know why your fib isn't printing over here. It looks like you only have the natives. You do have a 21 range on there. I like your reentry. I like everything about it. That's momentum based, right? Break, pull back. You're trading with the triggers. You're trading with everything on God's green earth. This one fights. And that's cool. What if, just hypothetically, and I see that you waited for the actual marker, right? Your small triggers came down and they're at the line and overrun. Did you have 3 divergences on, what did it look like up top? So you did have 2, absolutely, which is great. These roll. Just something to think about. If you're one of those NASDAQ traders, and you may not be, that doesn't fight small triggers, do you still have enough room to get paid if you at least start your fight on the correct side of the small? Just something to think about. Something to think about. And I know that NASDAQ breaks areas, and I use 3 divergences to confirm that break. And that's one of the easiest ways to do it, is to let the small chart tell me. Let's look. This was the NASDAQ. And this is what I do on situations like that. NASDAQ overruns a little bit, and it still continues. That's over. That's a big overrun. Let's see what happened at 1220. I go back and I study these, and I'm not knocking your trade. I know that you want to be consistent, and I know that you want to have a set of rules, but I can't keep up with your rules just yet. I will. But it's not a reversal of the trend yet because your large triggers are up and above the fibs. Does that make sense? It can't be a reversal of the trend because the large triggers are still above the fibs. If they were below the fibs, dude, all day long, I love it. So it's confirmation of what? I'm not sure. And where did that pink line come from? Can you show me your whole NASDAQ chart? And you're going counter trend from outside of the outer bands. I love that it works. Show me your range chart. I'm sorry, my arrow's not working. Dagnabbit. Show me your range chart back to where it first hit the fib. Can we see that? Because there may be a lot of great information that I'm missing that might have lent itself to that short. And I always feel like kind of a butthead when I'm talking about people's trades. But like this right here, that's overrun. Can you see it at that 72%? Sorry guys, remind me every now and then that you can't see my cursor. Hopefully tomorrow it's better. Here it all overran, right? Let me get the shape. And it's above, and you're thinking, oh man. And then 3 divergences, and that lower divergence says, well, that was probably overrun. You're probably going to be in a better position because of those 3 divergences to take that shot. Yeah, on this one, you didn't even get the smalls to the other side um, of the large. And I'm just looking to see if there was any information off to the left that might have lent itself a little bit. But it just looks like a transition phase that hasn't really transitioned yet. Um, and I love that you won, right? Three divergences helps me confirm overrun. Letting the smalls get below the large triggers on the range chart at least gives me a fighting chance. And I'm not knocking your trade, Jose, not at all. And I know that you're working on patterns. And I'm just trying to help you a little bit as I see what's going on. Um, yeah, mostly because I've made most of these mistakes, Jose. The biggest challenge with the introduction of using that market flow and seeing those HVAs is, especially as well as you read charts, is you're going to begin to anticipate these things changing. You're going to begin to anticipate the reversal. You're going to begin to anticipate if this area holds then, right? And you'll get so stinking good at it that what you'll do is in your head, you're going to say, well, I need a third divergence or a lower divergence, or I need my smalls below my large. And then your brain's going to tell you, but dude, you know this pattern. You know that it overruns. Just get into the market. And sometimes it works. And for me anyway, typically, it doesn't. But I'm not trying to project. And then JW, not a good top, but you do have odds favorable. Your smalls are breaking through, but your large are not. You let it pull back. You got in a lot early. And you were willing to risk $320, hoping that 1750 breaks with all that momentum, and it worked out for you. That's big risk. These are one of those things, JW. If I'm going to take this one, I love to take it on the way down, right? If that's my mid band, that is such a huge gap on a I hope this breaks from a 50-50. I like all that momentum though, man. And momentum is solid, and you did this well. You got in a little early. You knew where your initial stop should be. Did you drop it down above the pivot once it started to head that direction? It happened too fast. I guess that's good if it happens too fast, right? Thank goodness that support didn't hold with divergence at it. That could have been a big, ugly loser quickly. I'm glad that it wasn't. Great job, everybody. And now we're just kind of sitting at that area, right? Is it going to hold? Is it going to break? And this is a great example. We're not coming from a good top, and I'm sitting on support, and all of my triggers are above it. And I've got 3 divergences to the upside, 2 divergences to the downside. So we're witnessing that fight. This is where my brain starts telling me, dude, Mark, if it goes up, it's going to 17,060 at least. Or maybe it's going to finish the move to 78. And dude, Mark, if you just get in at 39, can you imagine 39 to 78, Mark? Wouldn't that be amazing? Fight that momentum. You have a blue fib. And then nothing really ever changes to the upside. And this is pretty common. I'm sharing my demons right now. Is I get in right here, man, it's got to go back up. It's a bad top. And it goes up a little bit and it stops me out because I get scared and I tighten. Then I'm like, oh man, it's got to go up. Let me take what I think is a momentum style trade. And then I get stopped out. And I'm like, well, it's still support. It's still holding. Let me reverse the look in my brain and try to go long right here on a close above the small triggers. Oh, no, that's not working. Well, then I should probably take this one at support because there's no way that support's not going to hold at this point. and then I get stopped out again. And guys, I don't know if anyone other than me has ever done that, but I can lose 3 or 4 or 5 trades based on opinions. And the whole time, my large chart set down, right? And this is where it becomes a little difficult because the better you get at reading your indicators, the easier it becomes to begin to rationalize, to begin to predict a little bit. Yeah, just wait for it to break or wait for it to not break. That is the greatest conversation that I have every day with my brother. Um, it might break, right, Dwight? It might have broke, or we can just let it break. And if it doesn't break and it reverses, well, then I'm just going to look for a short. But right now, everything says up on the large short. I just don't have any opportunities. So I'm caught in this little moment of there's nothing to do. Hardest thing for a trader, guys, is to do absolutely nothing when there's nothing to do. I promise you that. All right, I'm gonna take 5 minutes. When I come back, we'll finish strong, guys. Let me know what you want to talk about in the last 30, 40 minutes. Um, I gotta stretch my leg and roll my neck. Sitting in these chairs kills me. I will be back in about 5. All right, y'all. Let's finish strong. Um, did any of you guys that drive to work, did you notice that traffic is lighter this week already? Did you guys catch that? Same thing is true in the markets, guys. There are fewer and fewer people going to work this week. Crude oil, beautiful termination. Is somebody going to show me this picture? Guys, I'm telling you, it's the people that do this professionally, they make their money during the year. There's traders I know with Nexgen that trade for 9 months out of the year and then vacation for 3. They go home and they spend time with family. Look at that. Yeah, no kidding, Ron. All right, Jose. Small below the large, trending down. Pulls back to resistance inside of favorable large triggers. And with everything going down and strong triggers, makes it pretty easy. And then you get to multiple areas of support, divergence prints. Maybe held that one a little bit long. Jose, it feels like you're missing fibs, man. It feels like you're 5-1 fibs, maybe. Because you should have 38 fibs and you should have 34 fibs over here. And I feel like that would make a huge difference. And here I am forgetting that my cursor isn't working. Just from a management standpoint, is if that 38 fib were here and that 34 fib were here, you may be less inclined to hold through that divergence, if that makes sense. Then Paul said he waited over an hour for the first one of the day. Termination, full reversal, odds favorable, rock star entry. And it just keeps on going, huh, Paul? So with the divergence, you made sure that your entry was at the mid-band inside of favorable large triggers because that was the most likely spot with that much momentum. But Paul, one divergence didn't scare you out of that trade? And this is what happens through repetition, guys. This is the kind of trust you get. You don't start saying things like, oh my gosh, there's a loss of momentum, this trade's never going to work. You start saying with a great bottom and that much momentum, the only way I'm getting out of this trade is with 3 divergences. And that crude trade went right to your target. And guys, that's everything that we look for in a trade. It's a termination condition that creates a full reversal. It's the best of the best odds favorable momentum. It is strong triggers on your small chart. It is large and synthetic working together to create a bounce point with a mid-band right there. And guys, sure enough, it bounces right off of support inside of favorable large triggers. This is the one, guys. This is the one that you're not supposed to miss. If you did miss it, that's cool. Let's talk about why you missed it. Let's talk about why you didn't take it. What scared you? A lot of my greatest lessons have been from my brother going, why did you skip that trade? Let's talk about it. Did not take the trade because of 3 divergence. Are the divergence far enough apart to ignore? Love it. There's our question, right? David, perfect. Thank you for asking that. And David, let's go through the idea of when is an area broken. And I think that that's the easiest way to do this. This divergence line, when my large triggers get above it, it's out of the equation. This divergence line, when my large triggers get above it, it's out of the equation. This divergence line, when my large triggers get above it, it's out of equation. So I'm using that same idea for areas on the large chart with these divergences. And that's an outstanding question because that is pretty common. The rules for breaking an area are the same no matter what. Small and large get to the other side, the area is broken. So you can kind of reset every time they break, and we can call this one number one, right? Initially, this was number one, and then we got number two, and we're thinking, oh man. But then when the small and large broke, it resets and it goes back to one. And that couldn't have been a more timely picture, right? Because I'm asking, if you didn't take it, why didn't you take it? What did you see? And I think that hopefully helps you catch the next one that looks similar. All right, C-Dub. Odds favorable momentum. You hate waiting sometimes, but when you do, it pays. NASDAQ moves fast. Amen, it does, right? Everything is up. This is one of those ones when the high probability trend trade fails. Everything heads up. There's your mid-band. We're just above the large triggers. Absolutely no divergence. Everything says up. And if you didn't catch that one, C-Dub, you know what's pretty cool? Is that one would have been appropriate. That one would have been appropriate, right? Some days the NASDAQ gives and gives and gives, and some days it's easy. But I think that that the lesson here, and I'm not sure what you have going on with your triggers. I don't know what these big bad boys are right here. But you had odds favorable momentum on the large chart. Like everything set up, and sure enough, it went up. And I think this is a lesson for everybody. When everything agrees, when everything is doing the same thing, guys, it's easy. When everything says the exact same thing, it gets easier. When terminations are holding, right? When trigger lines don't agree, when all these different things happen, it's so easy to form an opinion. It's so easy to do your best to be first. Right now on the NASDAQ, guys, there's nothing to do. You've got terminations below, right? Your smalls are down, your large are up. I don't know what your high volume area chart says now, Jose. But this was your no triggers through termination. This was, let's see if I can, where your large triggers rolled. So as you start coming through it, right, I think it's going to be a bottom. Oh, man, it's cursor. And I think that this is such a good lesson. I think it's going to be a bottom. I hope it's going to be a bottom. It might be a bottom. Oh, we're getting closer to it being a bottom. Whoa, now everything's starting to push the right direction. Let me see if I can get some agreement. And it goes back to that 90-10, right? It's easy to hope that the market's going to roll. Letting your smaller chart indicators really lead the way a little bit when you have that potential top or bottom starts to pay dividends. Your charts say waiting, Safia. If this were my chart would say waiting too. I would want to see my small triggers back up in total agreement on my smaller, faster chart before I looked for an opportunity in my own personal trading. Waiting is hard, isn't it? Ugh, I hate waiting. But you see how there's no momentum at all? One way or the other. It's just all flat. And sure enough, it just pushed down for the retest, right? But look at your large triggers on the large chart. They are not wide. They are not angled in the direction of the trend. They are not above that fib. Definitely not a short trade. I don't see a long trade. All I see is a hurry up and wait. That's it. Go make a sandwich. Go do some Christmas shopping on Amazon, right? And then Dwight, your termination condition still hasn't broken, brother. And now we've got 3 divergences in the same price range. Great job not trading into a fib because you hoped it would work. Jose, look at how your large triggers are starting to roll. Everything still says up, but the small chart is starting to tell us that change may be happening. When the large chart still says up, but we kind of begin at that termination condition. And then let's look and see, because I have one built. There is a market flow chart, and those large triggers are still way up, right? And that HVA line wasn't at triggers, so it wasn't a rules-based trade at 23 because that HVA line was nowhere near large or small triggers in the direction of the trade. Oh, right on. So now we're just waiting for bounces. I was with you. I speak fluent, Jose. But it's kind of cool how you can do that, right? How you can just kind of say, that advantage isn't present, maybe I should wait. That advantage isn't there yet, maybe I should wait. That disadvantage is pretty clear. I'm definitely going to wait. And that's it. Weaker triggers, even with a clear path, 2 divergences. Is it going to push to this line or that line? Is it going to push to the midband? Or is this going to be that retracement that comes and retests the midband on the large chart? Hell, I don't know, right? Jose, do you have a pink HVA line right there at 15? Those are great spots for potential higher, lower divergences, depending on what you're looking at. Not yet? There's your 3rd divergence. Jose has a magic 8 ball. It's just patterns, right? Jose, you've seen this enough to know, man, that's not the best. I love that. Let's see what this is. No. Going through my pictures a little bit since we're on the tail end. It's 11:35. 3 divergences for the win. It pushed right past support, didn't it? But everything says up, which means it might be a little soon for a short. Yeah, but Jose, you don't have a no fibs through termination on the large chart, right? So it can't be a true HVA trade. Not one trigger line through 34. Can't be a high probability trend trade short. Still no triggers through. It's just rules, guys. That's all it is. It's just rules. Just got to learn them. Got to ask a few questions. What if divergence prints where? Here, Jose? From the top? Doesn't have anything to do with good top or bottom. From a bad top, large triggers up, everything above fibs. Whoa. Who cares if divergence prints? That midband becomes your potential bounce point. But it doesn't even matter, does it? Because where are all of your triggers in relationship to this area? And if these triggers are still up, and I don't even have really strong triggers here, and my synthetics are up, and my large have only just now started rolling, I don't have anything that says that I should be going short yet. These three divergences might just be a little push down to here before it continues up. I don't know. And then David, just to clarify for the divergence lesson a few minutes ago, was the large trigger on the 5-1 or the 13-2 large trigger on the 5-1 that breaks the previous divergence line? On the 5-1, David, so using the exact same idea on a large chart that you would use, where did it go? There we go. If the synthetic trigger wasn't there, it wouldn't matter. So I'm using the large and small for the small chart, getting to the other side of it. It's Christmas, Ron. It's Christmas. People are starting to vacation. And then Gino. This was the first thing that we talked about today. Did you miss it? Let's talk about it. This was our first picture for class this morning. Oh, no worries. Oh, that one's still stuck on the clipboard. Yeah, I've done that before. Just retake the picture of your picture. Sometimes that helps. Just bring it up on your screen and then take the picture. That's pretty squirrely, isn't it? Look at that NASDAQ. But Mark, it's green. But Mark, the smalls are pointed down. But Mark. But it's a pivot stop out at fibs. But Mark, I want to be in a trade. Does anybody have rules met for that one? I don't. If you do, I'd love to learn them. That would get me into about 75 more trades a day. We're down to 21 people. Hope everybody has great plans for the holiday. Hope everybody's got something to do. Guys, the market's just going to get slower and slower every day this week. We're halfway through the week, and a lot of people have already started traveling. A lot of people are already calling it quits for the week. Traffic is down very much. If you live in a big city like I do, you'll just notice it. Go out and drive. All the traffic is around the mall. None of the traffic is on the way to the businesses. And it's just it is what it is. The holiday season is a slower season, guys. This is a great season for you guys to do market replay. This is a great season for you guys to focus on just patterns, rules. If you're trying something new, work it on that market replay. Go through and just practice your patterns and hit pause and use your checklist. Scroll back. Guys, you can take your large chart and you can go to data series and you can scroll back 30 days. And it's going to take a minute, but you can scroll back 30 days and you can look at tops and bottoms and you can look at odds favorable and you can look at all of the circles on the tails. It doesn't have to be 10 days. You can get more. It used to be 30 days all the time. Safia, have a good one. It's nice to see you in here. Always nice to see you in here. Don't be a stranger. Try not to crash my stuff. But let me show you guys. Market replay. Guys, market replay gives you the ability to go back and trade the day as though it were live. Market replay gives you the ability to have your checklist right in front of you. And as you think there is a trade coming up, you can literally hit pause. And when you hit pause, the market's going to stop. It's not like oh, it's going to stutter or just hesitate for a second. You can literally hit pause and you can go through this checklist. Well, is the market coming from a good top or bottom? Do I really have odds favorable momentum? And the cool thing is, if you're like, shit, I don't know, well, then you can go back to the tutorial section real quick. And you can do something clever like, I know I'm mid-trade, and I know that I hit the pause button, but maybe I should be sure 100% that I do have odds favorable. Oh yeah, that's what it looks like. I don't have it. I'm not going to pull the trigger on this trade. Or you'll say, well, I do have it, so I am going to pull the trigger on this trade. Or you go back to it, okay, the momentum's great. What do my termination conditions look like? Is there something in the way? Is there something that's gonna potentially cause a bounce? And guys, you can use this market replay, and what it does for you is it provides the opportunity for you to not only practice patterns, right? To not only practice getting the looks of your rules, but what it does, and I think this is probably one of the most important things it does, is it shows you the potential that's available from a rules-based plan, from following the rules. And if you've ever done market replay and really, truly, honestly hit pause and waited to see if the rules were met and went through and made sure that everything you did was a high probability trend trade or a 50-50 with the rules met, you will be absolutely flabbergasted at your results when you eliminate opinions, when you eliminate the potential for you to kind of insert your will a little bit. I used to do market replay, and I would try to remember what the market did. I would try to remember whether it went up or down, and I didn't follow my rules. I took trades based on what I thought I remembered. Sometimes I got lucky. Sometimes I got absolutely killed. And for me, my ego, it was more important to me to have all that money on my simulator than it was for me to get these great lessons. And I had to kind of recalibrate my brain a little bit and say, God, dummy, you're doing this to study. Nobody cares if you make simulator money. Nobody cares if you're a simulator millionaire, right? Follow the path, follow the plan. And I think market replay is one of the greatest things, because if you get 10 repetitions during the day, you can go back with market replay, and then suddenly that's a 20 repetition day, which means that your month, if you replay every day, becomes 2 months worth of repetition, of experience. 6 months becomes a year becomes 2 years. And you can literally double or triple your ability to see the markets. And guys, I went back 30 days. I've got 30 days worth of data, 30 days worth of ups and downs, 30 days worth of termination conditions, 30 days worth of odds favorable momentum pushing the market in the direction of the trend. You guys remember this? When on the 27th, Thanksgiving, the market didn't do a damn thing for 12 hours, right? But the day before, there were some odds favorable momentum, beautiful looking trades, made some money, where resistance broke and support pulled back, and then this termination condition said don't do it, but this one said let's get paid, right? Guys, go back and look at these. This is how you get better. Termination for the win still here. We're down to 20 people and nobody's posting. I don't appear to have any more questions. Guys, is there something that you'd like to talk about? Otherwise, I'm just going to go ahead and shut it down today. I'll be here as long as you guys need me, up to noon. I have no problem being here. I actually enjoy being here. This is fun for me. But I really do start to ramble. I know that I start to ramble. Can't print capture. So Gino, are you using Snagit or are you using... Actually, you know what? I want you to try this, Gino. Control V. Go to the chat box and instead of trying to hit paste, hit Control V. Bingo. Pretty cool, right? So anytime you're in the pop-out window for the room, you have to Control V. It won't let you paste. Odds favorable momentum. David, show me a picture and tell me what happened. Describe it. Let's talk about it. The momentum is great. The path is good. The entry is solid. And with weak triggers and 2 divergences, you didn't hope. Gino, this is outstanding. This is good use of divergences, right? 1 divergence just gets you in. 2 divergences with weak triggers on both charts, it might push lower. And sure enough, it did. And that 3rd divergence said, if you didn't get out sooner, now it's time to be gone. Gino, this is awesome. And I love that 1 divergence, you still took in with all those advantages, but then you recognized the change, the loss of momentum, the weakening of the triggers, and it worked out. Nicely done, Gino. And you say you closed it out for about 1/3 of its potential. How do you figure? I love your entry, right? So you're in at 75.05. 4 lot, right? I'm sorry, you guys can't see my cursor. So check this out, Gino. Just as a thought. That's okay. You've got 4 contracts in it at 05. What if at that trouble spot, right? What if at that trouble spot, you said, I'm going to cash out 2 of them, which means that at your trouble spot, at that divergence with weakening triggers, you're already up $220. When the second divergence prints, you take your next exit there at 12, right? Which puts you up another 70, which now you're at $290. And you're saying to yourself, everything still says up, everything still looks good. I'm willing to take it off of support. And you're cool, you hold it, or maybe it gets you break even. And then the 3rd divergence, and you're probably out break even. It's okay to get paid. Every trade doesn't have to be a home run, right? But from 5 to 12, that's $280, dude. That's a great trade. Do it twice a day, and I'll even round down for commissions. Do that twice a day, Gino. You'll never work another day in your life. Better than a stick in the eye. Amen. But I think that's the big thing. They don't all have to be home runs, do they? And it's easy to get dejected about not getting to that final fib. It's easy to say, that's it. That's where I had to go. And I'm just going to fall on my sword if it doesn't happen. Get paid. Get paid. You can always re-enter, right? Gino, take 3 off for $330 and leave a runner. Leave 1 to run. Manage all of it, right? And there's so many different ways to do it. I'm a huge fan. This is just me. If I'm on a 4 lot, I'll take 3 off at $100, and I guarantee myself $300 in that trade. And if I lose 50 on the last one, I'm still net $250. My goal is to get paid every time. My goal is to have more going into my account than I have coming out of my account. Nobody calls me and congratulates me on home runs. Nobody posts my picture on the internet and says, did you see how this guy held on forever? Oh, I want to be him. Yeah, and you do have to be quick sometimes. But when you come into the trade with that divergence, you know that line creates a potential challenge, right? Especially when your trigger lines start to weaken a little bit. So you start this if-then. If a second divergence prints, you exit it. That's exactly what you did, right? And then the next level is going, well, if this is my trouble spot, maybe I take a portion off here. That's still great profits. And if divergence prints, I exit. And you start playing these if-then scenarios, and they become easier every day because every day you get more reps. Every day you start understanding what it is you're looking at more and more. And every day you begin to process it faster and faster. S&P is absolutely stuck. Crude oil came from those three divergences and is railing to the downside, isn't it? Isn't that cool? One little indication lets you know to not hope that everything holds. And now we've got all the triggers up still, three divergences. What do you think, guys? Is everything starting to line up for a potential long? How long did we have to wait for that one? What do our timestamps say? Our timestamps say that at 10:54, we knew that we shouldn't go short. At 11:54, things are finally starting to come together for a potential long. What did you do in that hour? Did you save your money, or did you spend it all on hope? And with that, guys, that's all I got today. I think it was a good day. I hope you guys learned something. I'm going to stop the YouTube stuff. I'm going to post it up for you guys in here. I do believe